So we are joined here today by Iwao Fusillo over at PepsiCo. This conversation, tell us a little bit about the data journey you've had over at PepsiCo and your team's efforts there.
Sure, happy to. So, Lynn, as you were saying, we are part of a very unique division in PepsiCo. So we're part of the e-commerce division. We are primarily an operating model that says we distribute our beverage and snack products through nearly 100 B2B retail partners. So if you can think of an omni-channel retailer that sells consumer packaged goods, they are likely a partner of PepsiCo. And one of the things that Gal and Lynn, we were talking about yesterday is what's unique about our division is we are like a startup inside a 125-year-old iconic brand. Our division was started about 6 years ago. It is a multi-billion-dollar division, I believe one of the fastest growing divisions within PepsiCo. And we believe that within consumer packaged goods, so CPG, the CPG marketplace, we believe more broadly that e-commerce will continue to deliver outsized growth in terms of sales and other key metrics. And so we're using data, just as you said, Lynn, we're in the midst of a data explosion. We're using data in three key ways to help us capture that growth. One is retail media networks. So retail media networks are very similar to the Google ad network, but they are essentially run by retailers, grocers, e-delivery companies on their owned and operated properties. And the consumer insights that come from these retail media networks represents a huge opportunity for us. We're very focused on that opportunity. Second is all about our partnership with, again, nearly 100 B2B partnerships that we have with these retailers, sharing data, sharing insights, and actually technology co-development. Our division is actually mainly staffed with people from data and tech. And then the third piece is predictive and prescriptive analytics around demand forecasting. And why are we focused on demand forecasting? We want to make sure that our ability to have products in the hands of consumers when they show up at these digital shelves, it's very much there. So hopefully that helps, Lynn.
Oh, it's a great overview. Gal, let's bring you into this discussion here. How does Pagaya fit into the equation? What role does the company play?
So maybe before we go into the way we use data, which is a very interesting one, maybe let's have a 30 seconds just introducing Pagaya. So we are on the other side of the spectrum. We are enabling the consumers, if you will, to be able to purchase Pepsi. We are a fintech company that was founded just 7 years ago and is public today. And what we do is we are connecting an AI into major banks and lenders in the US to allow them to have the ability to extend the consumer credit they are providing to their customers by something around 10 to 20%. So when a bank is actually connecting to us, we are utilizing a very strong tech that is based on the data we're going to talk about in a second, that is allowing them to actually approve customers that by the first look, they think that they are not credit worthy. And the interesting implementation of that, especially in the world of banks failure, as we had with the Silicon Valley Bank, and that the US economy, banks are more shrinking their ability to lend, is becoming in a very bigger need as such. And just a few days ago, we have announced that not just like mid-sized banks, but even a top 5 US bank has actually joined our network in the ability to help them lend on the personal loans to more consumers, and next to them, an OEM, which is a manufacturer of cars, that is trying to provide the financing for the consumers to be able to purchase these cars. And if I need to put in one title or in one sentence what we are doing with data or how we're believing in data, it's really the purpose of data for good. Because the ability of what we're managing to extract from that data is the ability to help more consumers that otherwise would have been denied in credit to be able to actually get their dreams. And people are less familiar because people think about the US as a very complex, well-modern financial system, but still today, 42% of Americans are actually getting either denied for credit or not getting the credit that they are seeking for. So this is a really big issue in the US ecosystem, and the ability to be able to do that is closing a lot of gaps in different minorities and different ESG efforts. So 55% of the loans that we are providing are actually for different type of minorities, in between African Americans and in between Hispanics. And this is really bringing a real difference to the society and to the ability to bring these consumers into the mainstream economy, simply putting, by using data for good. So that's how Pagaya play that, and that's how we do that.
Gal, you gave some very helpful statistics and real-world examples of data for good that Pagaya is working on. I want to bring it back to PepsiCo. Maybe you could provide us some real-world examples of how PepsiCo is using its data.
Yeah, for sure. I love the data for good, Gal. And if you look at the PepsiCo mission, it's all about creating more smiles with every sip and every bite. Mm-hmm. And how do we do that using data? We do it in a few different ways. One, if you look at the state of different data analytic capabilities, so natural language processing, giving computers the ability to read human text, right? Computer vision, just as the words would suggest, giving computers the ability to process images. We use those technologies and the data that's around it to optimize our product descriptions, to optimize our product images, so that consumers can find the beverages, the snacks, the products that they want in the fastest and most efficient way as they travel on these different retailer or grocer or e-delivery websites. So that's first way. Second, which is a close corollary, again, it goes back to the predictive and prescriptive analytics around demand forecasting. A little known stat in the consumer packaged goods industry is whether you're online or in store, it can be as much as 25% of the time the consumer does not see availability of the product they want. Right, so we use demand forecasting to make sure we minimize that experience and we maximize what's known as consumer fill rate. And so that's the second piece that's big. And then today we read a lot, certainly on Bloomberg, right, about the consumer and the consumer's hunt for value. And so just like any e-retailer, we use data and analytics to optimize the offers, personalize the offers that we're making to our consumers, right, to deliver value.
Well, I appreciate you're keeping my favorite chips on the shelves for me. Let's stick with you because you're also like a very well-known figure in data analytics. You've won awards and you talk to people all the time in the industry. So you're also a very good gauge of what the emerging trends and challenges in the space of data analytics has been and what it will be over the coming year. Give us a feel for what you all are talking about in the space and what you're worried about.
Yeah. Well, what I would share with this group is I had the privilege of talking at the CDO Chief Data Officer Summit in Cincinnati about a month ago. It was about a 550-person group of chief data officers from all over the world, every industry you can think of: automotive, financial services, consumer goods, healthcare, telecom. And the talk I was giving, it was all around, I've been doing data and analytics, I didn't mention this in my background, for about 2 decades. So I was at American Express, I then moved to the NFL. Most recently, I was at General Motors, and I joined PepsiCo about a year ago. And over the past 20 years, the playbook of centralizing data and centralizing analytics in ways that Gal just described, in the way that I just described, that was the playbook. And it was an almost infinite return on investment, right? The returns on investment would continue to rise and rise. In that talk I gave, I did an informal poll, and I asked the group, how many chief data officers are actually seeing a decline in return on investment in that centralized approach? And everyone raised their hand. And the reason is it goes back to what you were saying, Lynn, which is there's an explosion of data. It's real-time data. It's multiple channels. It's data that's deeply embedded in business processes across the enterprise. The days of having single analytic teams running analytics for the entire enterprise, those days are numbered. So coming back to PepsiCo, we're a very tech-savvy division in the e-commerce division. Our sales, our marketing, our supply chain teams, they are all very, very much data-driven professionals, right, in terms of their decision-making. And that's good, it's good for me because I happen to run business intelligence as one of my many responsibilities, but it also creates, an incredible backlog. So let's do an informal poll amongst this group. How many people remember AOL dial-up? American? Oh, okay, everyone.
Not Gal. Gal doesn't remember that.
Oh, Gal.
He's too young
I'll explain it over dinner. Yeah. There was that, very amusing sound when you made the connection, but the thing I remember, and I think most of us remember, is the minutes and sometimes hours it would take for that web page to load. And you would say to yourself, by the time the web page loaded, I don't even remember why I clicked on this page in the first place. And that's how business intelligence can be for a supply chain executive, a marketing professional, right, a salesperson. They need to have the answer in the moment in time that they're asking the question. So we are on a completely modern tech stack. We're 100% cloud. We are 100% on Snowflake. And so I brought in a capability from a Mountain View, California-based company called ThoughtSpot. It's a natural language-based self-service analytic platform. So now we have our sales and client management teams. They'll actually type in natural language, how did my sales do over the past 10 periods? And they get not only the tabular form of the answers to that, but actually graphs, right, visuals. And then they can say, well, wait a minute, what was the primary cause of my decline in sales in period 3 and the rapid rise in sales in period 9? And a sales driver analysis will come. So it's been a complete game changer for us in many ways. And I'll leave the group with a funny story. We held our first ever hackathon for our sales and client management teams, right? That shows you how democratized, we've made this element. Yeah.
I'd like to ask the same question of Gal. I mean, democratizing data is a really nice theme. Tell me about the themes that are emerging for you. You taught me clean rooms the other day.
Yeah, so I think we are a little bit the opposite. So you can say maybe we were born in the cloud, right? That's the different type of era. And for us, one of the biggest trends that happened this year was what I'm describing is the biggest marketing effort of AI ever happened in history. So the ChatGPT that actually made tangible what is the power of AI is really the biggest trend that helped us explain and explore what is the power of AI. People are less familiar with it, but the use of AI in different fintechs actually exists in the last 10, 15 years. But then you ask a different question. How much AI really exists inside banks? Inside the traditional institutions that back in the days use AOL, right?
That's right.
And the answer is very few. And the answer for that is very few is because the people who needs to make the decision on deploying these changes and speaking with the regulators or what are the benefits and why they should do that are actually not that familiar with these tools. So they are afraid too. And then one of the things that happened out of nowhere, and quite frankly, even ChatGPT is not that unique or new technology. It just has been so much easily accessible to people for all of us and has been maybe the fastest growing software that ever has been created in the humankind. But what it did is it opened up the understanding of the power and the importance of AI. So the trend that we see, back to Pagaya, is the acceptance of different and more traditional organizations, such as banks and insurance companies and others, that not just the chief technology officer or the chief data officers are aware of that, but suddenly the chief business officer, the chief risk officer, the chief compliance officer. It really was the biggest marketing tool that's going to have a crazy impact about how the world is going to be advanced, although the technology itself is not really any different. So that is by far the biggest phenomena. The other phenomena is really around the governing of this data. So if you think about the data that was collected 20, 30 years ago with the new creation of data and the ability to scrape and to keep more data, there is always a question of how can we utilize more of that data into a better outcome, better predictive power for the ability to approve more borrowers. And the really fine line that is being created in between the two is how you use all of that, but you use it in a way that is very compliant. When you're approving a consumer credit in the US, there is a very strong regulation around the fact that you cannot have any discrimination based on race, age, demography. So the ability on the one hand side to continue to collect more data, and as you said about the analytics, making things become more powerful and knowledgeable, in the same time, you need to make sure you're doing it in a way which is very prudent and in the way it should be compliant. So the theme about cleaning this data and making that available to use, but in the same time not dangerous to use, is the second phenomena that we see. So that are the two big ones, I would say.
Iwao, I need you to share a fun fact about clean rooms before we move on. Tell me about your experience with clean rooms.
We have some experience with clean rooms. Gal and I were talking yesterday. So at PepsiCo, what's very interesting is, for the most part, we don't have a strong reliance on first-party data, right? We have the nearly 100 partners, and generally it's a second-party data kind of business model. We have, in today's day and age, again, I was talking about Snowflake, but whether you're on Snowflake, Databricks, providers like Habu, there's incredible technology now that allows this non-PII-based sharing of consumer insights. The little tidbit that I was sharing with Lynn just before we came on stage is that, little known fact, is that American Express in the financial services industry and the NFL in the sports and media industry, they actually invented clean rooms before the technology existed to do it at scale. So if you do a Google search for my name and the NFL or my name and the American Express, you'll actually see the patent. And I had the privilege of being with some really smart team members. I had nothing to do with it, but my teams, they really they saw ahead to today.
So let's not beat around the bush here, and just address the elephant in the room. We're talking about data compliance and the dangers. Let's talk about data privacy and the state of data privacy regulation and policy as it exists in the U.S. and abroad. One of you tell me how you feel about the state of data privacy regulation right now. Is it too rigid? Does it need more flexibility? Could it be stronger?
Yeah, I'll start, and then I would love to hear Gal's perspective. I think when I was at the NFL is when the California Consumer Privacy Act came out, and I think all of our reactions to the regulations were, just like you're saying, gee, this does seem a little too strict. And on the one hand, maybe that is true, but at some level, consumers becoming aware, right, that there are different companies using data in ways that maybe they don't understand is not a great thing. So the rule I've always used in every company that I've worked for is if you can't explain to your grandmother how you're using the data, you should probably not do it. Right, and that's how that's really how we've run all of our data operations. Again, at PepsiCo, we don't really use very much in the way of first-party data, but at the NFL we did, and we made some very hard, but they were the right decisions not to do certain things because they would be, in our minds, a little confusing for the consumer.
And I think from our perspective. It's a two-sided of the same topic, but on the one hand side, from a credit perspective in the US, it's very, very clear, organized, regulated, actually working rather well, which you have credit bureaus that are set by the government to have licensing. And they need to step up on rules on the ability to collect and report data. The one thing that I found the most odd that hasn't been happening in privacy so far is actually a centralized place that you can just see and access for the understanding of which data has been reported on you. So the concept of credit bureau is very simple. It's like lenders are actually taking that into making decisions on lending, which you're giving permission to. And in the same time, every time that I want to see what these lenders are knowing about me or what is my score in their eyes, I have a very easy way to access that. So I think if I would need to advise to a regulation, I think that concept is the basic. Just give the ability for people to access and to understand what is the type of data that has been collected on them, and it needs to be a place which is very well known for people to assess. But what is happening today, everyone is allowing you to know it, but it's in page 54 in Google, page 22-2 in Teams, and if I would ask you people if you think that like Google or Microsoft is listening to your calls for different AIs, you don't really know the answer, right? It might be yes, it might be not. So the bottom line is accessibility of the real answer of what is being collected. I think it's a must-have in order to make sure people will continue to feel comfortable, and they will not have a blow-up or something very extreme that will happen and will not know, and then all the regulation will come. So we can just do it the day before.
Gal, let's double down on your data for good philosophy here and talk about like what your ideal world of data connectedness could look like in like 5 years from now. Like, what does that look like?
Yes, so that's a great question, and I think we spoke a little bit about that and the connectivity of generative AI, and I think if you will ask founders of companies in AI or CTOs how to use that, everyone would try to tell you it's very strong, it's very powerful, but like we don't know yet how it's going to work, but it's going to change the world. So I think we don't have yet a real understanding of where it will go and what it will do, but I can definitely think about how the vision looks like from a credit perspective and from an affordability perspective. And if you think about it today, there are a lot of, the world is working in silos. All the data is data that is relevant for the PepsiCo and marketing, the data that is relevant for finance, and it's very siloed. But at some point, with that powerful tools that have the ability to look on unstructured data, and I think this is the real thing here that ChatGPT or generative AI brought to the world, is the ability to bring all of that together. And then when you are going to the dealership, it's not like something you need to look for a credit, but a credit is actually being offered to you by your bank because there is a place that you opt in, that it's okay when you're going to a dealership and they can offer you data, that they can offer you credit. And these amounts of data that is being created is actually being driven for a good data decisions in the right place, in the right time. And maybe it's a buy now, pay later loan to buy a bunch of PepsiCo. So who knows, right?
A couple cases.
A couple cases. But the bottom line is that the unstructured part of it and the ability to drive a better predictive power in between the silos, in my point of view, is the next level of that.
Right. Well, we're running out of time here, but I can't end this panel discussion. Fine, you work at PepsiCo. That's great. But NFL, I mean, that's fun.
Different level.
You got to tell me like at least one fun story about like your experience at Pepsi. At
the NFL. Lots and lots of fun stories at the NFL. Probably my most fun one was I was giving a talk at the board meeting, and the board meeting is all 32 owners, and then they're able to bring two executives, usually the CFO and the president. So it's 100 people. And generally, they're all on their phones. They are not listening to you. And I was sharing a story about some very interesting research we had done in the early days of my tenure. I was actually in week 3, and here I am, presenting to the board. And it was all about the anthem and social media. It was some pretty insightful stuff. And every owner took the phone and said, "What did he just say?" So that was kind of an interesting moment. The second moment was I finished my talk. It was about a 30-minute talk, and I opened everything up to ownership, and I said, "Does ownership have any questions?" And it was radio silence, and I said, "That can't be. Everybody put their phones down. I don't get this." So then I'm walking back, a room similar to this, and I'm walking to the back of the room, and 7 owners grabbed me on the way, saying, "Listen, you have to talk to my data person. You have to talk to my PR person. You have to." And I said, "Oh, I got it. They are all so competitive. They were not going to ask the question in the big room."
In front of everybody else. Oh, that's really interesting. Well, thank you so much for joining us today. What a great conversation. Really appreciate the time.
Thank you.
Thanks a lot.